All right. Welcome back, everybody, to another deep dive.
Always fun to do these.
Today, we're doing things a little differently.
Oh. How so?
Well, you've given me this article,
Okay.
and it's called 5 Thankful MAPsignals Calls in 2024.
Oh, yeah.
So basically, we're going to rewind the clock about a year
Okay.
to November 2023.
Right.
And we're going to look at some of the predictions that this analyst, Lucas Downey,
Okay.
from MAPsignals.com, made about what was going to happen in the market in 2024.
Sounds fascinating.
And see how those played out.
Yeah. Hindsight's 2020, right?
Exactly.
So this will be fun.
But before we jump into the specifics,
Sure.
can you give us a little bit of background about what market analysts actually do?
Just-
What are they looking for?
Yeah, they're looking at all kinds of things.
Yeah.
They're looking at economic indicators,
Okay.
company earnings,
Mm-hmm.
interest rates,
Yeah.
investor sentiment, geopolitics.
Wow.
I mean, anything that could potentially move the markets.
Oh, wow.
It's like a giant puzzle.
So they're not just staring at stock charts all day.
No.
I kind of always envisioned.
Yeah, there's a lot more to it.
Okay.
It's a blend of the quantitative stuff,
Right.
crunching numbers and looking at historical data,
Okay.
but then also the qualitative.
Okay.
What's the overall sentiment?
Right.
What are the big players thinking?
So there's a little bit of psychology involved too.
Absolutely.
Okay.
It's trying to read the mind of the market, which is
impossible.
nearly impossible.
Okay.
There's so many variables at play that you can never be 100% sure.
Got it.
But that's what makes it so interesting.
Okay, so let's rewind back to November 2023.
Okay.
This was a time when
Yeah.
market sentiment was kind of mixed.
Right.
A lot of people weren't really sure if the market was going to rally or not.
Right.
But Downey,
Yeah.
he was feeling pretty good about small cap stocks.
Interesting.
And the reason why was
Okay.
he noticed something called a power thrust day
Power thrust day.
in the S&P small cap 600 index,
Uh-huh.
which basically means it had this huge single day jump.
How big are we talking?
It's like a 5% jump
5% in one day.
in one day.
Okay, that's significant.
Yeah, and he said this is pretty rare.
Yeah, 5%.
Yeah.
That doesn't happen every day.
No.
Usually you see 1, 2%,
Right.
maybe 3.
Mm-hmm.
But 5, that's a big move.
And,
That suggests a lot of buying activity.
exactly. Yeah, so that's what he was seeing.
Yeah.
And he saw that and said, okay, historically,
Okay.
when this happens,
Yeah.
small cap stocks tend to do really well
Okay.
in the following year.
So he's looking for those patterns,
Exactly.
those historical trends.
Yeah, and he found that there was a similar pattern
Oh,
back in 1994.
interesting.
And guess what?
When?
He was right. So in the year following that power thrust day,
Uh-huh.
small cap stocks surged almost 26%.
Wow. It's a pretty good return.
Yeah.
Not bad for a year.
Yeah. Pretty impressive.
Yeah, it's not a guarantee, of course.
Uh-huh.
But it's interesting that
Oh.
he didn't just rely on, one data point.
Right.
He actually looked back and found a precedent.
Exactly. He's not just throwing darts.
No, he's doing his homework.
Yeah.
Is what you want to see in an analyst,
Right.
someone who's actually thinking critically.
Okay, so now let's fast forward a little bit to December 2023.
Okay.
Downey makes another prediction.
All right, let's hear.
And this time he says that financial stocks, like banks and asset managers, they're going to be the superstars of 2024.
Now, this is interesting.
Okay.
Because without knowing, the exact context back then,
Right.
it's hard to say whether that was a contrarian view or not.
Right.
If everyone was already bullish on financials,
Uh-huh.
then it wouldn't be that surprising.
Okay.
But if there were reasons to be skeptical,
Uh-huh.
maybe there were some headwinds in the economy.
Right.
Or some concerns about regulation or something, then that would have been a much bolder call.
Gotcha. So tell me what he was seeing.
Yeah. What was he basing that on?
Well, he was seeing that big institutional investors,
Okay.
sometimes called smart money,
Right.
they were loading up on financial stocks.
Interesting.
And he'd noticed this pattern before.
Yeah.
Historically, when that happens, it often precedes a
Right.
really strong period of growth for that sector.
So he's basically saying, follow the big money.
Right.
That's a classic strategy.
Yeah, and guess what?
What?
He was right again.
No way.
The Financial Select Sector SPDR Fund, or XLF,
Okay.
soared almost 40%.
That's 40%.
Yeah,
That's huge.
I know.
I mean, it just goes to show that sometimes those big players, they do know something.
Yeah, they have inside information.
Well, not necessarily inside information.
Right.
But they have access to so much data and analysis.
Yeah.
They often have a much better understanding of where the market's headed.
It's like getting a peek at the expert's playbook. So we should be paying attention to what those big players are doing.
It can definitely be a valuable signal.
Okay. So we've seen Downey make 2 really accurate predictions.
2 for 2.
So far.
So far, so good.
Let's see what happens with his next one.
It's amazing, right?
Yeah. It's almost like he's got a crystal ball.
Well, not quite.
Okay.
I mean, even with all the research and analysis in the world, the market can still surprise you.
That's true.
You know, it's a complex system.
Right.
With a lot of moving parts.
Yeah, so even though he's 2 for 2 so far,
Yeah.
there's always a chance that these signals could be misleading or
absolutely
not as reliable.
I mean, think about it.
Yeah.
Market conditions are constantly changing, right?
Right.
Interest rates go up and down. Inflation comes and goes.
Yeah.
There are geopolitical events.
Right.
All these things can impact the market.
Okay.
So a signal that worked really well in the past might not be as effective in a different environment.
So context is everything.
Exactly.
Yeah.
Context is key.
Okay.
And then you also have to consider the fact that the market isn't always rational.
Right.
Sometimes it's driven by fear or greed or even just herd mentality.
It's like trying to predict which way a flock of birds is going to fly.
Exactly. You never know when they're all going to suddenly change direction.
Okay, so even a signal with a really good track record, sometimes it can just be a fluke.
A false positive.
Yeah. Okay.
And then another thing to keep in mind is that correlation doesn't always equal causation.
Right. I've heard that before.
Just because 2 things happen together doesn't mean that one caused the other.
So just because Downey's power thrust day signal has led to good returns for small caps in the past doesn't necessarily mean...
It doesn't guarantee that it will always happen. It's a good indicator.
Yeah.
But it's not a foolproof predictor.
Okay, so we always have to be a little bit skeptical.
Absolutely. You always got to think critically.
And do our own research.
Exactly. Don't just blindly follow someone else's signals.
Now, speaking of thinking differently, Downey seems to be pretty good at going against the crowd.
He does seem to have a contrarian streak.
Yeah. What do you think about that as a strategy?
Contrarian investing.
Yeah.
Well, it can be very rewarding.
Okay.
But it's not for everyone.
Right.
You have to be comfortable being wrong.
Okay.
You have to be able to think independently. And you have to have the courage to stick to your convictions.
Even when everyone else is telling you you're crazy.
Exactly. It takes a certain personality type.
Okay. So it's not just about being different for the sake of being different.
No, it's about seeing opportunities that others might be missing.
Because they're all caught up in the hype or...
Right, or they're letting their emotions get the better of them.
Okay, so can you give me an example of like a contrarian investment strategy?
Let's say a company releases a really bad earnings report.
Okay.
Their stock price plummets. Everyone's panicking and selling.
Right.
But a contrarian investor might step back and say, wait a minute, maybe the market's overreacting. Maybe this is a buying opportunity.
Interesting.
Because they believe in the company's long-term prospects.
Okay.
Or they see some hidden value that the market's ignoring.
So they're basically betting that the stock price will eventually rebound.
Exactly. They're going against the grain.
And hoping to profit from the market's irrationality.
Exactly.
It's like finding a diamond in the rough.
It is a bit like that.
Okay, so it sounds like Downey has a good grasp of this contrarian thinking.
He definitely seems to understand it.
But as you said, it's not a guaranteed path to success.
Right. You have to be careful.
Yeah.
You have to do your research. And you have to be prepared to be wrong sometimes.
Okay, so it's not a strategy for the faint of heart.
Definitely not.
Now let's talk about data. Downey seems to rely pretty heavily on data analysis.
He does. He uses a lot of different indicators and ratios and patterns.
Yeah. How important is that in the world of market predictions?
Data analysis is crucial.
Okay.
I mean, it's the foundation of everything. It allows you to identify trends.
Okay.
To test your hypotheses.
Right.
To see what's actually working and what's not.
So you can't just have a hunch about the market.
No, you need evidence.
Okay.
You need data to back up your claims.
But there's so much data out there.
Oh, yeah. It's overwhelming.
How do you even know where to start?
Well, the key is to have a specific question you're trying to answer.
Okay.
Don't just gather data for the sake of it.
Right.
Start with a hypothesis, and then look for the data that can help you prove or disprove it.
So it's all about being strategic.
Exactly.
With your data analysis.
Don't just get lost in the data swamp.
Right. And another challenge is that not all data is created equal.
Oh, absolutely.
right? Some sources are more reliable than others.
Exactly.
And some data sets might be incomplete or have errors.
All right, so you got to be careful.
So it's not just about crunching numbers.
No, it's about understanding the data,
Okay.
knowing its limitations,
Uh-huh.
and interpreting it correctly.
So it's a bit of an art as well as a science?
Exactly. It's not just about plugging numbers into a formula.
Okay, so you need some intuition and experience too.
Definitely.
And it sounds like Downey has a good balance of both.
Yeah, he seems to know what he's doing.
Okay, so let's shift gears a little bit and talk about psychology.
The human element.
Yeah, because emotions can play a big role in investing.
Oh, huge.
Right? People make irrational decisions
All the time.
based on fear or greed.
Yeah, it's hard to stay objective when your money's on the line.
Right. So how can we avoid letting those emotions cloud our judgment?
Well, one of the best ways is to have a plan,
Okay.
a written investment plan
Okay.
that outlines your goals,
Uh-huh.
your risk tolerance,
Yeah.
and your time horizon.
So you're not just reacting emotionally to every market swing.
Exactly. You have a roadmap,
Okay.
a set of rules that you follow no matter what.
Okay, so having a plan helps you stay disciplined.
Exactly.
Okay, what else?
Diversification is also key.
Okay, so not putting all your eggs in one basket.
Exactly. Spread your investments across different asset classes,
Uh-huh.
different sectors,
Yeah.
different geographic regions.
So if one investment goes sour.
Right. It won't wipe you out.
Okay.
It helps to mitigate the risk.
And it also helps you avoid getting too attached to any one investment.
Emotionally attached.
Yeah.
Yeah, that's a good point. Finally,
Yeah.
patience is a virtue.
Absolutely.
Right? The market is a marathon.
Not a sprint.
Not a get-rich-quick scheme.
No. It takes time.
Okay, so don't panic sell when the market dips.
Right.
Don't get greedy when it soars.
Just stay the course.
Okay. And remember your long-term goals.
Exactly. Don't let the short-term noise distract you.
All right, so basically,
Yeah.
keep a cool head. Keep a cool head.
Stick to your plan.
Stick to your plan.
And don't let your emotions get the best of you.
Sound advice.
So Downey's predictions,
Yeah.
they've given us a lot to think about.
They have.
Not just about how to identify signals,
Right.
but also how to think about the market
Exactly.
more strategically.
Yeah. How to be more disciplined.
And how to manage our emotions.
Absolutely crucial skills for any investor.
Okay, so as we move into the final part of our deep dive,
Okay.
we're going to explore some of the broader implications of Downey's predictions
Sounds good.
and what they might mean for the future of the market.
I'm intrigued.
Welcome back to our deep dive into Lucas Downey's market predictions. It's been a wild ride revisiting his calls.
It has, right? Like,
Yeah.
who knew what 2024 had in store?
Seriously.
Yeah.
But one thing that stuck with me from his article was how much he talked about rotation and reversion.
Yeah, those were definitely the buzzwords of the year.
So can you just remind us, like, what do those terms actually mean?
Sure. So rotation is basically when money moves from one part of the market to another,
Okay.
like from one sector to another or from growth stocks to value stocks.
Got it.
And we saw a lot of that in 2024.
Right.
Investors were pulling out of those high-flying tech stocks
Yeah.
and putting their money into things like financials and energy,
Okay.
which tend to do better when the economy is uncertain.
So it's like they were getting more conservative.
Yeah, exactly. They were playing it safe.
And what about reversion?
Right. So reversion is the idea that asset prices tend to go back to their historical averages,
Okay.
like a pendulum swinging back and forth.
Wow.
And we saw that too in 2024, right? Small cap stocks, which had been lagging behind,
Yeah.
they started to outperform large cap stocks.
Okay.
And value stocks made a comeback.
So it was like the market was correcting itself.
Exactly. It was like a rebalancing.
Now, the interesting thing is
Yeah.
Downey thinks this reversion trade is far from over.
Right. He thinks it's going to continue.
So what does that mean for us?
Well, it means there might still be opportunities
Okay.
in those areas that have been overlooked.
Like what?
Like maybe some of those sectors that got overshadowed by tech,
Right.
they could start to shine
Okay.
as investors look for more balance in their portfolios.
So we need to be paying attention to those areas.
Absolutely.
But it also means we need to be adaptable.
Right. Because what worked in the past might not work in the future.
So no resting on our laurels.
Exactly. Got to stay on our toes.
So basically all those things we've been talking about,
Yeah.
like understanding market history,
Uh-huh.
recognizing patterns,
Yep.
being aware of economic trends,
Important stuff.
doing our research,
Obviously.
thinking critically,
Yeah.
managing our emotions.
Crucial.
It all comes into play.
It does. It all matters.
So Downey's predictions,
Yeah.
they've been a great reminder
A good wake-up call.
of how we should be approaching the market.
Exactly. How to be more thoughtful, more strategic.
All right, so as we wrap up this deep dive, any final words of wisdom?
Well, I think the key takeaway is that the market is always changing.
Okay.
And we need to be willing to change with it.
So be adaptable, be open-minded.
Exactly. And never stop learning.
Awesome advice.
Thanks.
Well, that's all the time we have for today.
Well, that flew by.
I know, right? But thanks for joining us for another deep dive.
Always a pleasure.
And we'll see you next time.
See ya.